Good morning, everyone. Welcome to the 24/7. My name is Niharika Balia, and I am with you with the era of AFB. I hope I'm audible as well as visible. I hope the preparation is going on with the full swing because, yes, we are just heading towards the last leg of our preparation, right? Okay. Please confirm if I'm audible and visible to you. Okay. Thank you so much. Sure. So, when we talk about today's class, we're going to talk about the era of. First of all, if you haven't downloaded our app yet, and our app, you will find all the details regarding our ebooks, regarding our test series, and every other thing that is available. Okay, there's one more update as well. Our test series is available for you, and the test series is at a discount these days. So if you haven't reviewed our test series yet, then kindly go ahead and review our test series as well, as it is going on at a discount of 27% at the moment. So if you're looking forward towards our website or the further offers which are available for the aspirants, then we are providing up with this particular discount. I'll just share the image of that particular test series as well. Okay, before moving forward to that, if you haven't subscribed to our channel, then kindly go ahead, because yes, we are coming up with more and more videos regarding the JIIB as well as the CAIIB examination, right? Okay, so now let's talk about the next portion. The test series is currently available at 27% off, and if you're looking forward to it, then this is the perfect time that we are providing up with the discount of 27%, right? So for further details, what you can do is you can check out our app. You can use the code Y541 to avail discount. You can use the code Y541 to avail the discount that is available on our website, right? Okay, we've also started with the 3000 MCQ and PYQ classes that will be having around 600 case studies which are available for PPB, AFB as well as LRB, and the batch has already started, and the next batch is also available in terms of the the bilingual batch. One is English medium batch and the other one is bilingual batch. Both the batches are going on. If you're looking forward to your preparation, then you can check out both the courses according to your requirements. Along with that, we've also come up with the 200 case study batch for the examination, so you can also review that batch as well. Okay, so here comes the first question, everyone. The first question says, non-recurring expenses called a capital expense. Purchase of motor cars from the manufacturer by a dealer is a revenue expense. Purchase of a machinery by a manufacturing firm, its use is a capital expenditure. Purchase of machinery by a manufacturing firm for its use is a capital expense. Among the following, which is a capital expense? Or what is actually true in this area? See, first is a non-recurring expense is a capital expense. Normally that's true because the expenses which we incur in terms of a business where these are not regular in nature, they're irregular in nature, right? These expenses are not occurring every single day. For example, we don't go and buy a car every day. That means it's a non-recurring expense. That's correct. The purchase of a motor car from a manufacturer by a dealer. When a manufacturer buys a particular car, he's not buying it for the use of being sold again. He's buying it for the purpose that he's using it in the business, right? So in this case, what will happen? This is also true. The next point says purchase of machinery by a manufacturing firm. The machinery has been purchased by a manufacturing firm for its capital expenses. So basically, the machinery is purchased and is used in production. So if it's used in production, it would be a part of this. That is, all these three are correct. All the three statements are correct. Okay. Next question. The stock of stationery of a club was on 1st of January was 3000. Creditors of stationery were of 2000. Then opening balance of the creditor was 3000. The payment which was made during the year was 14,000. Then stock of stationery by the end was 2000, and they're asking you what is the amount to be charged in income and expenditure. For such kind of questions, all you can do is you can create an account. That will be really helpful in understanding how to deal with such questions. First of all, the stock of the stationery. The opening stock can be stated here. The opening stock is basically of rupees 3000. Then the creditor on the last day, that is creditor on 31st of December, is 2000. That means the closing creditor. See, assets start from the debit side. So I'm just noting down the asset on the debit side. The liabilities start from the credit side. So it would be by opening creditor. The opening creditor, if shown here, the closing stock, the closing creditor will be shown here. So we have got opening creditor and we have got the closing creditor. Then we have got the closing stock. So the opening stock is of rupees 3000. Then the closing creditor is of rupees 2000, right? It is on December 2005, and then opening balance of the creditor was rupees 3000. Now the stock of stationery at the end, that means on the last day, it was 2000. Then whatever amount we have paid is basically whatever amount we have paid is shown on the debit side, because this is what I'm making as a stationery account. So in terms of stationery, if I show it here, it would be to the bank, whatever amount we have paid. The amount we paid was 14,000. So what is exactly the amount that we are incurring in this year? It would be transferred to the profit and loss account. How do we transfer it? It is 14. This is 19,000. And from 19, if we deduct the 5,000, the profit and loss, whatever is transferred to the profit and loss, or in this case income and expenditure account, it is 14,000, which is the balancing figure. To calculate such kind of questions, you should always note down the assets first. So what I did here was, in this case what I did was, the opening stock is noted first, then the closing stock is noted. The assets are starting from the debit side while the liabilities are starting from the credit side. So their openings are recorded respectively. The closing are taken towards the opposite side, and whenever we make a payment, it would be shown in to bank. Right? So that is how we record it. It would be 14,000. Okay, the answer is 14,000. Next question, everyone. If a bill is made on 25th of May, it matures after 4 months, and the maturity date would be. Always remember, when they're asking about the months, you have to go by the months. When they're going after the date, then follow the date. So when we talk about this area, how do we look forward to it? The question says it is basically a bill is made on 25th of May, matures after 4 months. It's maturing after 4 months. So we have got 4 months. So 25th of May, from May, we have the next year month is June, then we have July, and then we have August. We'll follow the months here. The first month is July, June, then July, then August, September. So on 25th of September, our 4 months are completing. And after 25th, we are also going to add 3 days of grace. Without the grace, we cannot continue now. So basically, 3 days of grace is available to everyone. So it would be 28th of September. Correct, sir? The correct answer is D. Moving on, the accounting standard 10 deals with fixed assets, depreciation accounting, consolidated financial statements, or the accounting for taxes on income. Accounting standards are basically asked in terms of the sequence, or very less. There are chances that they can ask you any specific question regarding any specific details of any any accounting standard would be given. What is the objective? How do we deal with that? Those chances are little less, but then still it's better to cover it up accordingly, right? So here, in terms of accounting standard 10, the AS10 deals with fixed assets, or we also call it PPE, property, plant and equipment. Excuse me. Next point. The prime entry for reversing a discount allowed to a customer would be the journal, the credit side of the cash book, the sales book, or the debit side of the cash book. The prime entry for reversing a discount allowed. Basically, we would have given discount to someone, but that particular person is not paying us properly. So basically, we are going to reverse the discount allowed. Why should we allow discount to someone who is making default in their payments? So when we are there making default in their payments, so what do they do? Then the next point is credit side of the cash book. So basically, it's already recorded in the cash book and not the debit side. So what are we gonna do? We'll be just recording it in the journal. Then in the journal, rectification entry would be passed na. Ideally, discount allowed is noted in the area of this. Discount allowed is noted on the debit side. Discount received is noted on the credit side. Discount allowed and discount received is already sorted. The problem is that in terms of journal, we record it that way, right? In terms of journal, we record its rectification. Next question. A forfeited share cannot be reissued at a discount, can be reissued at a discount of maximum 10%, be reissued at maximum discount which is equal to the forfeited, or none of the above. Whenever we forfeit a share, there's a simple rule. The forfeiture amount, once we forfeit a share, the forfeiture amount, whatever amount we would have seized from the previous shareholder. For example, the price of the share was 10 rupees, and from the previous shareholder we have seized rupees 5 because he has already paid rupees 5, and after 5 rupees he refused to pay. So what I did was I kept his share with me, and now I'm giving the share to a new person now. So basically I can give the the shares can never be issued at a discount. If the total value is 10 and if I've received 5 from the previous shareholder, I can ask the remaining the next person, or the person to whom I'll reissue my shares, I'll give the discount of 5 rupees, right? Because this is what I've already received. So whatever amount you would have received till now, that is the maximum discount that you can give. That's C. If I've received 4 rupees from the previous shareholder, we can give the same discount to the next shareholder, right? That's the rule. Okay, this was asked in the examination. Goodwill comes under which of the following account? Real, personal, nominal, or none of the above. Many people think that goodwill is a fictitious asset. It's basically an intangible asset. It's an intangible asset. When we talk about being an intangible asset, it's our reputation of the organization which cannot be touched. But yes, its valuation is done. So basically, it's a real account. Okay, moving on to the next question. This was asked in 2019. Profit and loss contains various items related to expenses and incomes, the nature of which is nominal, real, personal, or none of the above. When we talk about trading account, When we talk about profit and loss account, when we talk about income and expenditure account, all these accounts have nominal account nature. There's one particular account to remember in case it's asked, that is called the receipts payments account. Only this particular account is noted in terms of real accounts. Simple reason, it records the cash receipts and cash payments only, nothing else. So that's why we record it as a real account, while all other accounts in terms of trading, P&L, income and expenditure, these accounts give us the profits or the losses. So these are always recorded as nominal accounts. Just a different account is receipts and payment account, which is prepared in terms of the NGOs, or we call the not-for-profit organizations. It's A. Okay, here comes the next question. On 31st of March 2018, the total assets and the external liabilities were 1 lakh and 3,000, right? So then they say, okay, the total assets which the company has got is rupees 1 lakh, and they have made it by using their own capital, plus they have also got it from outside. That is 3,000 is from the people who are not the people who built the business. During the year, the proprietor had introduced additional capital of 10,000 during the year. So this is on 31st of March. We want to find out the opening capital. For the closing capital, all we can do is we can deduct the capital is equal to the assets minus the outside liabilities. It's basically 87,000. It's the closing capital. So how do we calculate it? Closing capital is this. And during the year, we have also introduced more amount into the business, right? So, sorry, this is 97. During the year, I have introduced more into the business. So whatever more I have introduced, if I reduce it, I'll get the original value. So it is 10,000 less. It would be 87,000. Right? The correct answer would be B, 87. So the correct answer is 87,000. Okay. Next question, everyone. The profit on reissue of forfeited shares is transferred to General Reserve, CRR, Capital Reserve, or Revenue Reserve. When we talk about the profit on reissue of forfeited shares, whatever profit we make, sometimes we receive a good amount of the amount from the previous person, but we do not give the discount to the next person or the upcoming person. So what are we dealing with this in this area? What are we dealing? We are actually giving them more discount. So we, okay, if I received 5 rupees from the previous shareholder, I could have used this share forfeiture to give discount to the next shareholder. I refuse to give. I rather sold the share at 12 rupees per share. I said, we are a very reputed company. We are going to give the shares to you at a premium. So whatever discount amount I received from the previous shareholder gets into my pocket. Now I'm not liable to anybody for that. Now this particular amount will be a part of the capital reserve. That's the rule. Correct, sir? It is a part of the capital reserve. Okay, so this is it for the day, everyone. I'll be meeting you in the next session. Till then, keep preparing and all the very best for your examination. Thank you so much for watching. If you're looking forward towards any of our batches, then what you can do is you can check out our website for the further information. That means you can go on to Adda 24/7. Look out for the best offers which are available for all the JAIIB as well as the CAIIB examination aspirants, or we can say the bankers. So for all the bankers, you can review our website. So this is where you can review Adda 24/7. There it is, the website Adda 24/7, and here in this area you can review the JAIIB and CAIIB examination. Here This is the area JIB and CAIIB English medium. In the English medium, you can find all the details. We have come up with the power pack batches, as well as we have also started with 600 case studies plus 3000 plus MCQs plus PYQ batch that is also going on. You can review it. The benefit of this batch is we will also get live plus video classes. That means you will be able to look forward towards the videos. If you're looking forward towards, you have any problem in terms of in terms of any MCQ and you want to review its concept, then you can also check it out in the video sections. So this is what is available for everybody who can look forward who is looking forward towards practicing, plus the content videos in case of any doubts or any weaker sections, right? So this is what you can look forward to, and all you need to do is click on the area of buy now, and when you click on buy now, you can use the code Y 541 and you can apply it. So there you'll get it for 3219.77. So all the details for this particular course is definitely available for you on our website. And along with this, if you're looking forward to the test series, that is also there. The test series is currently going at a discount, so you can also check it out, right? The test series are here at this point of time. You can take it up. There's 50 plus tests are there. Then 10 mock papers are also available for all these areas for PPB, AFB and LRAB. Then if you're looking forward to it, then kindly hurry up and check it out. So we'll be meeting you in the next class. Thank you everyone.